Hello everyone, this is Apeksha Kamath from Udupi branch of Sikasa. First of all, I would like to thank Kozhikode branch of Sikasa for providing me this wonderful opportunity wherein I could take part in International Student Teacher Contest. Before I jump into my topic, these are the few questions I feel like any beginner investor would have experienced. We've all heard names of big shots such as be it Warren Buffett or CA Rakesh Jhunjhunwala, etc. And we rather go into a dilemma wherein we think that how a person can earn in crores or in millions just by trading in stock market. We have also heard that gold is the best investment opportunity, or real estate market is like very booming right now, and how a person with very less resources can invest in such a sector. And the very answer to all these questions would be mutual funds. Okay, so before I get into depth of the concept, mutual funds is a concept which any person would know basically, but it is introduced in our final syllabus just for the sake that we get to know the technicalities. We get to go in depth of the concept of mutual funds. Okay, so this mutual funds forms part of your advanced financial management. There is a paper called Advanced Financial Management where you have a chapter of mutual funds. And before I start mutual funds, I have to tell you why we have such a paper in our final syllabus. And the objective of this paper is such that it provides us with financial management theories and technicalities which we can use in making strategic decisions. Okay. So mutual funds, the concept of mutual funds has a weightage of around 8 to 10 marks, as I've seen in most of the previous year papers. And I've also attached the trend analysis for all the previous years. Here you can look at the trend analysis of all the concepts in the advanced financial management paper. And as we have learned in the previous class, the portfolio management, we have done the lesson, and this mutual fund concept is completely connected to portfolio management. There we have learned evaluations and evaluation of fund manager. Here also we get to learn that, but I'll be teaching it to you in the very end. Okay, so what are all the outcomes that you would get at the end of this session? What things we'll be learning is, one is what is mutual funds, classification of mutual funds. We'll be learning the types of schemes. We'll be learning advantages and disadvantages, and I'm pretty sure you guys all know it. We'll be learning the terms associated with mutual funds, evaluation of mutual funds. Like I said, I'll be teaching it at the very end. We'll learn the role of fund managers as well as role of FIIs. Okay, so let's start with the very basic meaning of mutual funds. Mutual fund is a pooled investment vehicle. I'll go through the words and I'll explain it. Mutual fund is a pooled investment vehicle, and a person, instead of directly investing the money in the stock market or bond market, he pools his money along with a lot of other people, and there will be an expert person. Here he is called a fund manager. He will handle all the money. He will deal with the securities, and he will earn some returns on those investments and pass on the returns after deducting his fee. Okay, so how does mutual fund work? Here I've given it in sentences, but this slide we can see that there is a workflow of mutual fund. Here there is an investor who pools money with the fund house. Now what does the fund house do? Fund house appoints a fund manager, and fund manager invests in securities like stock, be it gold, bond market, real estate, etc. And he generates returns. He passes those returns back to the investor. So who plays the crux role in this whole workflow? That is the fund manager. The returns depend on his performance, and that is why we even learn the concept of performance appraisal, etc. Okay, so being a beginner investor, any investor would feel such a question: should I invest in stock or mutual funds? Because both seem lucrative, and the answer is very simple. You have to invest in securities. You have to invest in securities, but it depends if you directly want to invest in the stock market or mutual funds. That depends on your risk appetite. Risk appetite is such that how much risk can you bear? Can you bear capital loss? Can you bear capital depreciation? If your answer is no, then you have to go for mutual funds, okay? So now let's come to classification of mutual funds. There are different types of mutual funds in India, and each have their own set of aims, goals, etc. It's floated for a particular reason. And mutual funds, the decision of the investor to choose which fund to go for is based on his objective, as in what does he want at the end of redemption of such scheme or fund. Okay. So on the basis of objective, there are three classifications, namely functional, portfolio, and ownership. Okay. So in functional, we get to see two types of mutual fund schemes. One would be open-ended mutual funds. Open-ended mutual funds means that an investor can at any time enter or subscribe to a mutual fund and at any time come out of it also, can go for redemption option also. But closed-ended mutual funds is exact opposite of the open-ended, which is it is floated at a specific time and the redemption is also decided at the very beginning, okay? And next, under portfolio, we have equity funds, we have debt funds, as well as special funds. I'll explain each one of them in depth. Under equity funds, we have growth funds. Growth funds is subscribing to a mutual fund that is equity oriented, whereon it is a long-term investment, okay? Here, the investor's objective is getting capital appreciation in the long term. He aims for long term. Whereas in aggressive funds, the investor wants quick returns, quicker income, and he goes for quicker income generation methods, so he can subscribe for aggressive mutual funds. In income funds, people choose for income funds, whereas they have a set of goal in mind such that they want a regular income for them, okay? And in balanced funds, it is you get to invest for a long term also, and the objective is both you want regular income as well as capital appreciation. In debt funds, you have two types. Debt funds are generally, the proportion of debt is higher in the mutual funds, and there are two types here, bond funds as well as gilt funds. Bond funds, like the name itself suggests, it is subscribing to a mutual fund, whereas the mutual fund units is highly based on bond market, and gilt funds is treasury bills, be it, or dated securities, etc. Then in special funds, we have four types of funds, that is index fund, offshore fund, sector fund, and gold fund. Index fund, we have always heard a term called Nifty 50. All these are like all the companies or all the listed stocks that are in the first 50 positions. So in the index fund, what does the fund manager do? He takes all the money and invests in the first 50 stocks, and this mutual fund generally earns the return of how your index is performing, okay? So next we have sector fund. Sector fund is generally investing in a particular sector, be it one infrastructure sector or FMCG, etc. Gold fund is investing in gold securities. This is done usually to gauge the increase in gold, okay? So next, the third classification is ownership. The objective is ownership, and here we have three: public sector, private sector, and foreign mutual funds. Public sector means that the mutual fund floated is sponsored by a public, a company or a bank that is in the public sector. Private sector mutual funds is such that it is sponsored by a private sector company or a private sector bank. And foreign mutual funds is such that a company who has a branch in India but has headquarters of offshore, that is headquarters in abroad, those companies are sponsoring for mutual funds to be operated in India, okay? So once we are done with classification, we come to the crux of mutual funds, that is the calculation part of it. And there are three concepts that play a vital role, or those are targeted mostly in your exams. Those three are, one is computation of NAV. NAV is your net asset value. And next is computation of your returns. And lastly, we'll get to know the holding period return. First, let us go through what NAV is. So, we've come to the topic net asset value. What is net asset value? It's the value of per unit of portfolio holding. See, I've included the sentence. It is the value that a unit holder would receive per unit if the mutual fund would get redeemed. Okay. So, how can we compute net asset value, you ask? The answer is the net asset of the scheme, of the mutual fund scheme, and that would be divided by number of units outstanding. Your net asset would be your total asset minus total liabilities. Total assets, market value of your mutual funds, receivables, accrued income, and other assets. And your external liabilities or the total liabilities would be accrued expense, payables, other liabilities, etc. Payables could be that the fees which you have to pay for the fund manager is not paid, etc. All those can form your payables. Okay. So I have included a numerical question to know what the NAV concept is. So the question tells that the mutual fund scheme is of 20 lakhs. The face value of units is rupees 10. Number of outstanding units is 1 lakh. And the market value of fund investment is 28 lakh. You have a bills receivable of 40,000 and liability of 20,000. So let's see how we can solve this numerical. So as we all know, the formula is such that value of assets minus value of liabilities divided by number of units outstanding. Okay. So the total assets which we have in our hands is the market value of investment plus bills receivable, which is 28 lakh plus 40,000. That would be your 28 lakh 40,000. And the total liabilities which you had is 20,000. Okay. So applying the NAV formula, what would we get? We would get total assets minus total liabilities by number of units, that is 28 lakh 40,000 minus 20,000. The whole must be divided by 1 lakh, which would be your 28.2 per unit. That is your net asset value. Okay. So the second very highly targeted or aimed numerical concept in the concept of mutual funds is computation of returns. How can we compute one's returns? Returns of an investor can be of three types. One would be your cash dividend, capital gains disbursement, and unrealized capital gain. What is your unrealized capital gain? That you would incur or accrue, that would accrue when there is change in the fund's NAV. Okay. So let's see the formula and then maybe we can solve a numerical. So the return that an investor would get is the totality of dividend, realized capital gain plus unrealized capital gain divided by base NAV. Okay, to see how much additional you have got. That in letters would be D1 plus capital gains plus your unrealized capital gains would be your new NAV minus your old NAV. That whole must be divided by your base NAV, that is your old NAV. Okay. So, I have not included the numerical, but I would provide you for the PDF. Okay. Next, the third concept is holding period return. And in case an investor holds an investment for less than an year, his payoffs can be easily calculated with the help of this formula. What is the formula? So, if in the question they have given you directly the NAV at the end, that is at the redemption as well as at the beginning, then we can use such a formula: NAV at the end minus NAV at the beginning plus your income, that is dividend, whole divided by NAV at the beginning. See, basically NAV at the end minus NAV at the beginning divided by NAV at the beginning would give you the total returns. That along with your dividend would be your holding period return. Okay. So in case the question has not given you the NAV directly and they've given you the redemption amount, then what would be the formula you would use? You would use amount at the end which you got minus amount at the end amount at the beginning which you invested plus the total income. income is your dividend or capital gain disbursements, etc. That must be divided by amount at the beginning. And the 12 by n would be your period. So if a person has held the investment for say 6 months, then it would be 12 by 6. And if it's 24 months, 12 by 24 and so on. And that 100 is for the percentage point of view. So I've included the numerical over here, people. So the question asks, a mutual fund that had a net asset value of rupees 20 at the beginning of the month made income and capital gain distribution of rupees 0.0375 and 0.03 per share respectively during the month, and then ended the month with a net asset value of rupees 20.06. They're asking us to calculate monthly return. Okay, so how do we calculate the monthly return? I've told you the formula. NAV at the end minus NAV at the beginning plus all your income portions. The whole must be divided by NAV at the beginning into your period. Okay, so what do we get by applying that formula? 20.06 minus 20. 20.06 is your NAV at the end, minus 20, the NAV which you started with, plus all your income was 0.0375 and capital gain distribution was your 0.3, and that whole must be divided by NAV at the beginning, that is 20 again. The answer you would get is 0.006375, and if you want it in percentages, that is your monthly return. Okay, let me stress on that. That's your monthly return. If you want your per annum return, what do? You just multiply it by 12. And if you want it in percentages, you multiply it by 100, for which you get 7.65% per annum. Next, okay. We have come to the end of this session. We have gone through all the technicalities. There are a few other concepts left, a few terms which I have to introduce you with, but we'll take only so much in this class. So what and all have we learned? We've learned the meaning, and I've told you about what the mutual funds is. Okay, mutual funds is a great tool. Say, we all know that MRF, that the current, as I checked today, its share price is 1 lakh, more than 1 lakh, 1,07,000 and odd. A normal layman person, can he invest completely in buying a share of MRF? No. What he can do, he can go for mutual funds, and indirectly, along with a lot of other people, he can invest in the stock market. Okay, so we've also learned the classification. It is on the basis of function, portfolio, and ownership. Yeah, and we've learned the calculation aspects, the 3 calculation aspects, that is NAV computation, your returns computation, and holding period return. And what are the things that we'll see through in the next class? Those are your expenses of mutual funds. I'll cover the initial expenses, the entry and exit load of mutual fund, all those. Trail commission, expense ratio, side pocketing, tracking error, etc. Should we just brush up on those topics? Okay, we'll do that because we still have time left. So a few concepts that I would be discussing in the future classes would be entry and exit load. Let me just brush up on that. What is your entry load? Entry load is the fee that you have to pay when you join or subscribe to a mutual fund. You get the benefit of adding that fee to calculate the NAV of the mutual fund. And exit load is the fee charged at the redemption of the said mutual fund. Okay, and that again can be deducted from your NAV. And all these are in very depth, which I need a certain time to make you understand. So I'll take it up in next session. This again over here, computation of required return, is a very popular concept which is almost asked each attempt. Okay, so again, I'll take up time for that. Trail commission. What is trail commission? Commission or the fee that you pay for the advisor. Okay, so the purpose of charging this commission from the investor is to provide incentive to the advisor to review their customers' holdings and to give advice from time to time. So expense ratio, again, I'll take it up in next class. Side pocketing, a beautiful concept. Next class. I hope you guys are excited for next class. I am. Tracking error. Okay, so we've come to the end of this PPT, which means that we've come to the end of this session. So I really will be surprised if you could gather a lot of things which I told today, but these are the 5 things you have to go home with, okay? So one is focusing on the conceptual clarity. You've come to the final stage, and the most important thing over here is having that conceptual clarity. Without that, sitting on this platform, I maybe shouldn't say this, but without that, it would be very difficult to clear the CA final level, okay? So most of the concepts are very detailed, very technical in this level. So what is my take on it? You have to break it and make it as simple as possible. So that if there is an easy question which targets only the second step of one big question, then you'd already know it because you've made it simple by breaking it down. You've learned all the steps in it, okay? So make your own short notes. This is digital. I can never check if you have your own short notes, but this is very helpful for your revision. While there is a lot of stress, you have to watch this marathon, this lecture, that lecture in 2x speed and all those during your exam time. So one thing that would help is your handwriting, your short notes, which you prepare during watching these lectures and all. Learning strategies to make all these learning fun, because at the end of it, once we've cleared all our exams, we'll be a professional. There is no learning. There will always be learning, but this stressful learning wouldn't be there. I advise you to not make it stressful even before clearing it, okay? So learn strategies. In high school and all, we've learned all the mnemonics to make all the points easier. Learn all those things here. Make this learning a very fun activity. And practice to be super confident. Confidence is the key. Communication is the key. But for us, confidence is the key. We need to be confident before every exam, while preparing for every exam, all the things. So this brings to the end of this session, people. So if you have any doubts, I have given you my WhatsApp number as well as my mail ID. Mail would be preferable, but I would be available at all times. Do not hesitate to throw any questions at me. And with this, I'll conclude this session. Thank you.